what does it stand for? Oh, volume weighted average price. All right. So we're gonna look at the. Let me turn Mary down just a little bit more. So the volume weighted average price is what day traders and intraday traders use to trade the market. So if you don't know how it looks, so we're looking at the SPYs right now. So the VWAP is going to be spelled. You can pull it up in your settings. When you pull it up, it's going to be VWAP. Okay. And when you pull up VWAP, now because I wasn't able to pull up Superfans, I'm only going to answer questions. So if you're in here, I'm not ignoring your comments. I'm only really answering questions for people that grab that HeartMe or that Superfans. Now, Superfans, you got to separate yourself from everyone else. So if you are a Superfan, make sure that you use the stickers that I have, especially if it's stocks that you want me to look at. All right. Let me move my coffee over here. So this is going to be a smaller session, which I know a lot of you guys like, right? But let's talk about the VWAP. The VWAP, again, the VWAP is the volume weighted average price. Day traders use it. So I'm going to start using it a lot more, especially when we go live. Especially when we go live at 8 o'clock in the evening. So if you don't know what my schedule is, let me explain it to you real quick. All right, so Monday through Fridays, I go live from 6 p.m. to 8 p.m. Eastern Standard Time. I go live from 6 p.m. to 8 p.m. Eastern Standard Time. From 8 to 8:30, I'm going to start doing live trading where I can show a lot of futures traders, and it's only going to be in the futures market. But it's for you futures traders that want to make, you're trying to make money daily. You don't really know how to do it. You want to see how day traders trade. So because the market isn't as, you're not going to get as much volume as you do during the regular market. There is some decent volume between 8 and 8:30, especially in the commodities market if you're looking at oil or looking at gold. So I'm going to start trading Monday through Thursdays from 8 to 8:30. All right. So using the VWAP is going to be necessary because we're going to want to know where the way that the VWAP works is the indicator is going to put more weight on the price that everyone is buying. So let's say nobody's buying at a certain price, but everybody's buying at like 100 and 101 and 150. $100.50. You're going to see a line that goes across your screen that's going to be right around that 100 area. That's important because when you're trading or investing in the stock market, those areas that you see the most orders go, that's how the stock market moves. It sees these orders and the stock price moves towards the bigger orders, right? If somebody comes in and wants to buy $1 billion worth of stock at a certain amount, at a very, very low price, and there's not enough shares out there, you can pull the market down, which is why the SEC always watches those whales that are out there that are buying. And that's why they have to let people know when they're buying, because if they come into the market, they can shift the market in their direction just by placing orders, not even getting the order, guys. If they just put an order in, they can pull the market down, especially in the options market. And if you ever heard about the flash crash, well, they're saying that the flash crash was caused by a trader that had a large account, and he slipped up and placed a couple of orders, and it brought the market down. So they had to go out there and fix it so that one individual can't control the market. But I know what ended up happening when they figured out that can happen. I'm pretty sure the powers that be was like, yo, you can move the market with the options market? Oh, okay. So anyway, to make a long story short, the VWAP puts more weight at the prices that everybody is buying. So think of it like what's the word? Let's say, think of it like I'm trying to think of the word, like the equator, not the equator, but it's just like a magnet. It's going to pull things to it, right? So if you're above the VWAP, it pulls prices to the VWAP. If you're below the VWAP, it pulls prices up to the VWAP, because the VWAP is where everybody is buying. Now, it doesn't mean that you should always short to the VWAP or go long to the VWAP. It just means you need to know where it is. So let me pull it up. I'm sitting here talking about it. Let me pull it up so that you guys can see exactly what I'm talking about. All right, so I'm going to use I'm using a different format, so bear with me. So I'm trying to figure out how I'm gonna have to do it the long way if I use this format. I'm trying to do a bigger screen because it's my super fans, but it's driving me crazy because now I have to, let me see if I could do it this way. I'm gonna try something. Let me add it. Just bear with me. This is a new format for me. What is going on? Let me try this one. Nope, it's not on there, so let me just add it. Add it in real time. So I'm going to Upper Studies. I'm going to go to VWAP. And when you go to VWAP, you're going to see you're going to see a line appear on your screen. I'm going to go in there and I'm going to change the VWAP so that you guys can see it. I'm going to make it thicker. I'm going to make it about a 5. I'm going to change the... All right, so that's the VWAP there. Oh, you know what? The VWAP is also going to give you 3 values. I don't use the outer or inner band. I mean, the outer bands. So on the, you guys can't see what I'm doing, but while I'm putting the study in, I'm going to take off the upper band and I'm going to take off the lower band. And I'm only going to keep the VWAP, which is the middle band, which is going to be that white line that you guys see. Now, that white line that you guys see is the VWAP. So the way people trade it, even on Friday, if you were trading the VWAP, you would have noticed that this red cloud that you guys see is the FW Mobo. We're not going to get in it today unless one of my super fans asks me to explain it. But you guys are looking at the SPY. So let's say you were day trading the SPY, right? Do you guys understand what the VWAP is? In the comment section, tell me, what color do you think the VWAP is? I want to make sure everybody is on the same page. What color is the VWAP? What color is the average line on my page? That's the VWAP. It's white. All right. Now, what color is the cloud that you guys see, and what color are the candles? Somebody put purple. It's red. So everybody and their mama, we all on the same page, right? We're on the same page. We see that you should be taking a short. I don't know if anybody else can see this, but you should be taking a short. Cloud is red. VWAP is kind of pointed down. Candles are red. TTM squeeze at the bottom are red. This is how I day trade. Now, what I also would have done is I'm gonna, when I'm day trading, I'm gonna put a 5-minute, I'm gonna look at the first 5 minutes of the market, and I'm gonna put a line across the top and the bottom of the first 5 minutes. If we can't hold above that top, when you're breaking out, if it can't hold and it starts to go down, Joel is going to short. This is how a lot of day traders trade. If you haven't been trading with a box setup, breaking out of the box or breaking below the box, day trading is probably very hard for you. We're also using a VWAP. So the VWAP is also pointing down. So this was a very, very easy short. And you would have been able to catch this whole, well, not the whole move. Well, yeah, pretty much the whole move until we broke back up to the VWAP. Y'all see this? We went down in price, down in price, down in price, down in price. If you wanted to short again, you could have shorted way up here and then you would have caught it again. Anytime we get to the VWAP, guys, it might spend some time there, but until you start seeing it angle up, I don't really want to be long. You see how every move should have been short, 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 short. And then you would have caught that whole move to the downside. Now, I know most people are like, well, Joel, Friday was an easy day. All right, let's go to Thursday. What? Am I looking at the right day? Oh, yeah, let's look at Thursday. Now, Thursday was a little weird, but let's look at Thursday, right? Thursday, the VWAP was going up. You're looking at the SPYs, guys. You're looking at the SPYs. You see how the VWAP is underneath us? The cloud was red, so you had converging things. You had the SPY, you had candles going up, but you got a cloud going down, and you got the VWAP underneath you. So in situations like this, you chill. It's 50-50. Okay? You could take a long if you want to, right? If you want to, around 10 o'clock, everything started to go the right direction. See, here it's red, but we're above it. So that's they're going against each other. Up and down does not make a trade. You need to have up and up or down and down. Up and up or down or down. This is up and down. Don't want to do that. But then once it started to go a little green, and this is why a lot of people were having some issues, this started to go up. Even though we're going down, guys, the VWAP is underneath us, but the cloud was kind of green, right? So I'm kind of getting a bullish bias. It comes down to the VWAP. We can't stay underneath the VWAP for more than 3 candles. So then what happens? We start pushing a little bit to the upside, I think. Yeah, we start pushing a little bit to the upside. We come back to the VWAP. Look what starts to happen. Candles start to go red. VWAP starts to go red. You start spending more candles underneath it. Time to go short. Even though I don't even remember, but so, Thursday was a tricky day because we spent a whole bunch of time at the VWAP, right? But I'm just showing you guys how I think. You would have been able to catch this move, a little bitty move, but that little bitty move only lasted for about 15 or 20 minutes. Now, if you're trading the way that I trade, most traders, especially that I see that are trading today, you guys are trying to trade 9:30 to 4 o'clock. There's no longer a 9:30 to 4 o'clock session. The session is broken up into 3 parts. All right, I don't know if you guys know this or not. Stop trying to trade from 9:30 a.m. to 4 o'clock p.m. Now, you can do it if you're bullish and bearish and bullish and bearish and bullish or bearish. I'm talking about having one bias in one direction the whole day. You guys that are using 15-minute charts and hour charts to try to take a 9:30 trade, put it on, go to work, and then come back at 4 o'clock, you guys are not going to make money because the market has 3 different sessions: 9:30 to 12, 12 to 2, and 2 to 4. There's 3 sessions, and each session is about 2 hours long. I'm usually done trading by 12 o'clock. I don't trade the 12 to 2 because that's lunchtime, and I don't trade the 2 to 4. Now, my West Coast friends love to trade the 2 to 4 session. My East Coast friends love to trade the early session. My 9 to 5ers, y'all love trading the 12 to 2 session, and that's why you lose a lot of money because you're trying to trade at lunchtime. All right, during the times when the market really is going flat or doing doing this move right here where it's not doing anything. All right, but then right around, this is 12 to 2. 12 to 2 is the no period. Like, nothing's happening, guys. But then look at what happens from the 2 to 4 period. You see how the market broke out? You see how you got a nice little move early in the morning? And then, you got a bigger move in the evening. The biggest moves are going to happen 9:30 to 12 or 2 to 4. I try to tell you guys to stay away from the 12 to 2 sessions. In fact, go watch Fast Money or go to lunch, like chill, like stop trying to trade the 12 to 2 session unless you have to. All right. Cool. So the VWAP, let's go to Wednesday. Let's see if it worked on Wednesday. If you were trading the VWAP on Wednesday, what are we looking for on Wednesday, guys? Let's talk about this trade. What the heck is going on here? I don't even want to explain what's happening. Tell me at 9:30, because this is what you guys are going to see at 9:30. What is your immediate reaction when you see this market at 9:30? Anybody, well, I'm not going to say anything, but what do you guys see at 9:30? It might be news. It's short, right? But you see red, right? The cloud is telling you that it's red. So even if I woke up and I was really happy and bullish and I wanted the market to go up and I got news related stuff that I thought was good, it doesn't matter because there's a cloud above us. You're also opening up and you're seeing the VWAP, right? So at 9:30, we see a cloud. I'm thinking short like the whole time, but I'm not going to just short it at 9:30 because I see red and red. Y'all know how I trade. I'm probably going to use a Heikin Aiki candle, and I'm going to wait until I see wicks to the downside before I start trading. When I start seeing wicks to the downside like these, if you don't know what I mean by wicks to the downside, this is what I mean. These are wicks that are pretty much on one side of the candle. These are small, but these are longer on the bottom side of the candle. That's what I'm looking for. I'm looking for a candle like this. That is a beautiful Heikin Aiki candle that's telling me this is a push down where there was a close on the low of that candle. That's what I kind of want to look for. So I probably would have been short right around 10 o'clock, and I would have been able, you see these candles right here? these are the kind of candles you're looking for if you're using the Heikin Aishi. Now, I don't care about you guys' entries, to be honest. Everybody is going to trade a different way. Everybody's going to have a different trigger to get into anything. Really, guys, a lot of the times you guys lose in the market is you're going against the trend of the market. So you need to use, in my opinion, trending indicators. So you get the direction wrong, and then you don't have the correct risk to reward. All right, you don't have the correct risk to reward. Your rewards are way less than how much you're risking. So you get the direction wrong, and then your risk to reward is wrong. That's the reason why a lot of you guys lose. It has nothing to do with it has nothing to do with what you're, it just depends. All right, there's multiple factors. It's just that, in my opinion, I want you guys to start. I want you guys to start thinking a little bit more clearly and more simple. Like take indicators off of your charts and start trying to trade a blank screen, kind of like mine. Now, there's a lot going on here because I got a cloud going on, but my trending indicators are helping me. I only keep one indicator on the bottom of my screen, and I'm only allowed to have one moving average on my top screen. And what I've done, guys, that has really, really helped me in my trading is that I only use one chart for that strategy. So when I'm intraday trading, I'm using one chart. When I'm swing trading, I'm using one chart. When I decide I want to invest in something, I'm using one chart. I'm not flipping back and forth between 50 different charts. I'm only allowed to use one indicator on the lower half of my screen, and I'm only allowed to use one moving average on the top portion of my screen. That's going to allow me to clearly see what's happening. If you add a trending indicator on your platform, you don't need any of them other indicators that are out there, because it's going to color code your chart. It's either going to say red is down, green is up. Now, if you don't have access to a color coding indicator, you can use Heikin Aishi. Like, you can go on any platform, guys, and pull up Heikin Aishi. It's going to color code your chart. The only other trending indicator that's out there is the TTM trend. You're only going to find it on Thinkorswim or TradeStation. So unless you're using the TTM trend or the Heikin Aishi candles, there's no other way you're going to be able to color code your chart. And that's where most of you guys are having issues. You don't know the trend. You don't know the direction of the trend. And then the VWAP helps you when you're day trading by telling you where the average price is, so that you know if you're getting away from it or, if you're going to it. So that would have been a decent trade. Another reason why a lot of you day traders are having an issue is because you're trying to trade from 9:30 to 4. That's really the lazy way to trade. I just want to trade you because what you're going off of is that we're going to trend in one direction the whole day. The market has been trending every way, every day, especially when volatility goes up. Trends are not lasting a full day anymore. They're lasting 10 or 15 minutes, and then the trend is changing. So you're getting chopped up, especially when the volatility goes up. All right, if you're using a 1 minute chart, your trades are only lasting 10, 15 minutes, which is fine, but just know that you're scalping. All right, and knowing what you're doing, learning what you're doing is half the battle, right? All right, what's some other questions? That was the VWAP. That was the VWAP. I know there's a lot of indicator questions this session, because we went over indicators all week long. So we probably covered pretty much all of them, we pretty much covered all of the most popular indicators this week. And then I introduced a couple that you guys never heard of. TJ asked, what is a good risk to reward? Well, it depends on what you're trading. So I'm going to be honest with you. If I was trading something like the spot, well, I reverse engineer the way that I trade. So if I'm trading the futures market, for you futures traders that are out there, I'm risking $100 per contract, and I'm trading the minis. I'm risking $100 to make $200 or more. I'm risking $100 to make $200 or more. Now that's easy because if I'm trading, let's say I'm trading the micro YM, right? And I'm risking $100. And I know that every 50 cents, every dollar move, I'm gonna make 50 cents. So so if I'm risking $100, that means I'm risking 200 points. All right. So I already know that no matter what I'm trading, I know I'm risking $100. So if I'm risking $100, that means I have to know how much are the moves on the thing that I'm trading. So in the YM, I'm going to risk 200 points. If I'm trading the micro ESs, I'm risking 20 points. If I'm trading the MNQs, I'm risking 50 points. All right, because every $2 move, I'm going to make $1. Now, that's per contract. So if I decide to go 5 contracts, then I'm risking $500. If I'm trading with 10 contracts, I'm trading the big one, I'm risking $1,000. All right, so it's per contracts for the micros. Now, if I'm trading options, when I'm trading options, guys, and I'm looking for a home run, I'm going to risk 50% to make 100% or more. Y'all know me. I'm not going to be satisfied unless I get 100% return in my options. But I'm more aggressive than you guys. I don't day trade options like you guys do. I keep telling you guys, stop day trading options. Stop day trading options. Day trade futures. It's more control and you're making the same amount of money. Like, why do I have to day trade options? Especially when it's harder. Options, guys, is the most illiquid asset class that's out there. That means the bid and the ask are going to be way further apart. Sometimes you might not even be able to get out that option if there's not enough liquidity behind it. So stop doing it. Like, it baffles me that you guys are using $4,000 and $5,000 in the options market when you can go into the futures market and trade the same $5,000 and make even more. So why do it? It makes no sense to me. But y'all do what y'all want to do because y'all grown. But when I trade the options market, guys, I'm trying to make 100% to 1,000% return. Y'all know I'm trying to do the millionaire challenge trade of the day. Now, if I'm swing trading it, I'm still doing the same thing. I'm risking 50% to make 100. Now, for you day traders that are day trading options and you're not getting the volume that you need, don't risk 50%. You should be risking maybe 25%, but you still should be looking for 50% moves. You guys taking 10% here and 20% there and 13% there. Guys, if I get a 13% return every day in the options, if I get 13% on Monday, 13% on Tuesday, 13% on Wednesday, 13% on Thursday, and then I risk, 55 or 60% on Friday, I can be right on Monday, Tuesday, Wednesday, and Thursday, and then break even on Friday. That's winning 80% of the time. Y'all know the average trader, the average super trader, like myself, we don't win 80% of the time. My average when I'm trading is about 77%. So you guys are winning 80% of the time and losing everything on Friday, and then you're wondering why can't I make any money in the stock market? Because your risk to reward is off. It's off. Guys, Guys, if you got a 1 to 2, think about this. Listen to me. If I want to get 100% return, I can lose 50% on Monday. I can lose 50% on Tuesday, assuming that I'm not using my whole account. I can lose 50% on Wednesday. And then I can win on Thursday and Friday. I only won, 40% of the time, and I'm still profitable. I can have a strategy where I only win 40% of the time, and I'm still gonna profit at the end of the week. You guys' risk to reward is off. You spend too much time in losing trades and too little time in profitable trades. You guys understand? It's just numbers. It's just numbers, guys. It's a numbers game. But you guys, you gotta learn how to lose. You got to learn how to lose first. All right. Now, we were talking about risk to reward. I pulled up the VWAP. What else was I doing? I done lost my train of thought. Was I doing something with the charts? I pulled up. We were trying to figure out the cost of it. So yeah, my risk to reward. Okay, I remember. So when I'm trading options, I'm risking 50% to make 100 or more. I always say or more because if you limit yourself to one thing, you're never going to get 1,000% return in one day. You're just not going to do it if you're always taking 100. Now, what I usually do, guys, is when I get to that 100% area, if I still have time in the day. So here's the thing. Let's say I'm trading options. I'm trying to get 100% return. Let's say first 15, 20 minutes, I'm already up 100%, and I throw a trend line underneath it, and it looks like it still wants to go. Let it go. Bring your stop up to break even, and let that bad boy go. Because sometimes you get lucky, guys, and then news comes out while you're in it, and then it just keeps pushing. The only way you're ever going to get a 200 or 300 or 1,000% in one day in the options market is you can't just always go for 100% or 50% or 100%. And a lot of you guys are like that. You're like, it's got to be this way, and it's got to be this way, and it's got to be this way, and it's got to be this way. I want you guys to be sticklers on your stops. Your risk, I want you guys to be strong on your risk because that's what y'all ain't doing. Y'all are lax on your profit and then you're strong on how long you're going to be in it. I'm so strong, I can hold this loss for a long time. I can just handle the pain. Stop doing that. I'd rather you guys say, oh, I can stay in this profit as long as it can make money. I want it to go parabolic while I'm in it. You guys like it to go parabolic when you're losing, to show everybody how strong you are. I'm weak when it comes to losing. I start seeing red. I start crying. My voice start getting high. I'm like, I got to get out of this. I'm a straight B when it comes to losing. I don't like how it feels. I ain't losing. So I want you guys to, and I'm making jokes, but I want you guys to spend less time in losing trades and more time in winning trades. All right. So I'm risking, so that's futures, that's options. When I'm trading stock, guys, it depends. I'm going to be honest with you. When I'm trading stock, I'm risking 1 to 3% because the stock market doesn't move as much as the other markets. So if I was trading Apple, let's say, for example, I was trading Apple. How am I going to figure out my risk to reward? Well, first, I need to know how much Apple moves. So if Apple is $247 a share, I know me, I'm either going to buy 50 or 100 shares of it. So if I bought 100 shares of Apple, it's going to cost me $24,000. All right, so if I was trading Apple, I'm going to trade it with about $25,000. Why? Because I know that's 100 shares. That's very easy for me to calculate in my head. But then I'm going to go and look at how much Apple moves on a daily basis. We talked about this indicator this week also. It's called the average true range. the AVT, or the ATV, the average true range. If you're just hearing about the average true, that's ATV, Joel, not ATR. Average true range, guys, tells me how much Apple moves on a daily basis with volatility calculated for the last 14 days. It told me that Apple moves about $5 a day. So if Apple moves $5 a day, guys, you guys can do math. And let's say I catch the maximum move for Apple and I got 100 shares. How much can I make? Let's do the math. Apple moves $5 a day. I got 100 shares. I catch the whole $5 move. How much money can I make in a day? In the comment section. Please let me know. Apple moves $5 a day. I got 100 shares. It moves $5. How much can I make? Thank you, Self is You. We got some mathematicians in the comment section. It's $500. Anybody trying to make more than $500 is being unrealistic. Now, thinking that you can make $500 is also you ego tripping. You ain't gonna get the whole full $5. I tell people to maybe try to get a third or a half of what that ATR is. So if Apple's ATR is $5, I'm gonna try to get $2.50, but I'm gonna be realistic and say I'm just looking for a $2 move in Apple. If I get more than that, then I am great. Now, you wake up that morning, you know Apple moves about $5. You see where the VWAP is. You're like, you know what? I'm just gonna buy Apple, I don't know, when it hits this VWAP, right? So let's say Apple drops. Let's go back to 930. Let's say Apple. I'm just thinking. I'm trying to make it easy for you guys. Let's say you see Apple go to 248.55. You know every dollar move you're gonna make $100. So you want to make $200. But right around $100. Apple was at 248. It drops down to 247. 247.8. And it keeps ranging $1. Now you know it moves about $5. So at the low today it was 246. At 942 we were sitting at 246. I'm just going off of risk, guys. I'm not going off of my true. If I was day trading this, I'm going to day trade it differently. I'm just going off of the fact that the low was right around 246.6 and it rose to 248.8. I'm trying to show you guys how even in a ranging market, you got to be realistic on what you can even make. So when it got to that $200 area, if you were able to catch it down here at 246, if you were able to catch it down here at 246, and that wouldn't be my strategy for this because it was red, but let's say you were able to catch it at 246, you know that once it got to 248, you're like, yeah, I know it moves $5. I'm really looking for about $2. So what I usually do, guys, is you guys ask me, how do I set up my risk to reward? If my reward is a 2, then my risk should be 100. So I'm going to risk $100 to make $200. You see what I'm doing? I'm going to risk 100 to make 200. So if I get in Apple at 246 and it drops to 245, I have to get out. But if Apple goes from 246 to 248, my reward is twice my risk. I'm using $25,000 to do it so that I can have 100 shares. So I kind of know what the reward is going to be in the first place. Your risk should always be half. Your reward, I'll say this, your reward should always be double your risk. If you want to trade like the masters, it should be double or more. So if I'm risking $100, I'm looking to make $200 or more. If I'm risking $50, then I want to make $100 or more. You guys are risking $100 and taking 20. And then you're risking $100 and taking 30. And then risking $100 and taking 50. And then risking $100 and taking 10. And then on Friday, you lose 100. And you done lost all your profits for the week because your rewards are too small and your risk is too big. Okay? So stop doing it. Stop doing it. Okay? We're just talking about, Tiffany, we're just talking about risk to reward right now. We're not even talking about a strategy. The strategy is risk to reward. How much are you risking versus how much is your reward? You guys are risking way too much and taking too little on your reward. That's the reason why you guys are losing. When I do consultations, guys, within the first 3 minutes, within the first 30 seconds of the conversation, I can already tell what the issue is. More than likely, it's risk to reward. Now, you guys do have a hard time understanding trend also. All right, you guys really do have a hard time understanding trends in the market, right? So I use trending indicators to help me with that. I don't know what happened to all of I think I updated the Thinkorswim and it deleted all of my settings that were at the top of my chart. So you guys got to bear with me. Let me pull up some of my, if I was looking at a longer time frame, like, which is wild. Like my week chart and my day chart. Let me pull up this week and see what happens. Just bear with me real quick. Let me see if this is the correct chart. Okay, that's the correct chart. All right, so this is like my week chart. Where a lot of you guys go wrong is you guys see how clean my charts are? When you look at my chart, y'all see how easy it is to see the moves? When you look at that chart, you're like, Joel, that's very, very easy to understand. Red is down. It went down to this yellow line that everybody was buying at. And then it went green and then it went up. Right? What's happening right now? See, a lot of you guys right now, you should know exactly what's going on in Apple at this particular moment. But what ends up happening is you take these classes where you're going back and forth between 87 different charts. You then clouded your charts up with so much information you can't even read it no more. What is Apple doing right now? Right now, what do you guys see? Just what is your eyes telling you? What is your eyes telling you? Just off of just looking at that chart. The more colors that you see automatically is going to be red, right? So you're training your brain to kind of understand what direction we're going in. But when you're going back and forth between 17 charts and then you don't have any trending indicators on there, all you're learning how to do is to flip back and forth through charts. You're not really learning the trends of the market. Apple is going down in price. There's no question. This chart does not look like Apple wants to go up. It looks like Apple wants to go down. This looked like Apple wanted to go up. See that chart? That chart said, ooh, we hit this yellow line and it looks like Apple kind of wants to go higher because we have a series of higher highs and higher lows. We're going in that direction. See how easy it is to catch that trend? You guys refuse to learn how to do this. Watch this. When things were going up in value, did y'all know all you had to do was learn how to draw this one little line right here? Watch this. You could have gone back to this date. You could have set this line right here, just like this. And watch what I do. This was July of last year. Now watch what I do, guys. This was July of last year. I'm just going to hit extend to the right. Y'all see what I just did? I don't even know what the future is going to show me. All I saw was about 5 or 6 candles establishing a trend. And then watch what happens. You could have just held this trend all the way up until then. That went from July. I know it's like a magic show, right? That went from July to December. In December, we broke that trend. It's not that hard to see in the charts. It's not that hard to see. You break that trend, and then look at what's happening. Guys, this is not rocket science. Y'all just refuse to learn how to read charts. Y'all have too much shit on your charts, and you're looking at 17 different charts trying to find the answer. The answer is Apple is selling off. There's nothing else to it. Now, what is it gonna sell off to? That's where you start learning how to draw, right? You're like, okay, I don't know, I see an area here. I see an area here. Maybe it sells off to here. If we break that, guys, y'all can see it with your own eyes. Where are we going? If we break this white line, guys, where are we going? I ain't even gotta explain it to you. Where you think we going? Where y'all think we going? If we break that white line, what is the next stop? What is the next stop on the train? You said to the moon. To the 200, and that's not even the 200-day moving average, guys. That's the 200-week moving average. That is the strongest moving average you're going to find. Yes, guys, there is a moving average that's stronger than the 200-day. And you know what it is? It's the 200-week. The 200-week moving average is the strongest moving average you can find that most investors use. It's the strongest. We call it the yellow brick road in this room, because if you can get down to the yellow brick road, oh, you about to get rich up in this bitch. All right, it's the yellow brick road. Now, if we get to the yellow brick road, this is what you guys are also not doing. You got to see if it's even realistic. You're like, Apple drops 15 to 20%, Joel. How far away is the yellow brick road? You got to think like an investor. All investors know to buy Apple 20% off. I don't know where you've been. Everybody knows to do that. Apple drops 20%, buy it. It's a buying opportunity. Why? Because all I did was I looked at 10 years of information. Watch this, guys. Y'all are like, how did you get all that information? You looking at it right now. From 2020, we're going to do it right now. Let's time how fast you guys could have got this information. You didn't need ChatGPT. It's 10:56 right now. Watch how fast I do this, because y'all be complaining like you can't do this. From 2020, let's see all the dips that Apple made up until now, and let's just calculate them, right? From 2020, Apple dropped from here to here. That was a 35% move to the downside. Great. We're gonna write 35% right here. 35%. Now I'm a little slow. All right. Then Apple sold off right here. It sold off here about, take my little line. And I'm not coming up with these figures off my brain. I'm using this little trend line. It's telling me. That was 25%. Great. Apple sold off 25% then. We went all the way back to 2020. That was 25%. Great. Then Apple sold off here. Take my little trend line. It came here, dropped it here. That was 20%. Great. I'm going to write that here. 20%. Cool. Then Apple sold off. It sold off there too. I'm just looking for the biggest moves, right? Then Apple sold off right here. That was about a 12% drop. It's only been 1 minute, guys. It's only been 1 minute. We're now in 2022. Apple sold off again from there to there. That was about a 17% move. Then Apple sold off here, which was about a 28% move. So if you didn't know that Apple sells off, it sells off. It doesn't mean something's wrong with the company. It just means sometimes the thing sells off. Then Apple sold off from here to here, about 29%. It's been 2 minutes. Then Apple sold off from here down to here. About 18%. We are now in 2025. That was a pretty big move. And where did we go to? The yellow brick road. Apple sold off about 34%. Now this is between 2020 and now. And now Apple is sitting at we're down about 14%. Now, we're going to pull up this chart and see what we see, right? That was 4 minutes, which is about how long I thought it was going to take. 4 minutes time, 5 minutes. You just did the work that they pay dang, look at how I look though. We'll just break it down. So, we got a 35, a 25, a 20, a 21, a 17, a 28. Just off of an average. What's kind of the average of all of that, guys? You got 35% sell off, 25% sell off, 20, a 12, a 17, a 28, a 29, a 18. A 34. What's the average? Not even using real numbers. What's the average off of just what you just saw in 5 minutes? About 25%. I just did 5 minutes of back testing on Apple, and you guys don't know that it sells off 25%. I just did that in 5 minutes. 5 minutes. So you think I'm going to take a 14% drop? Heck no. 14? I ain't seen 14 yet. 34, 18. Let me go back again. 29, 28, 17. There's a 12, 20, 25. 25, 20, 12, 17, 28, 29, 18, 34. No way Joel's going to take 14%. But you know what I will take? I say, well, if the average is 25 and the yellow brick road is down here at 198, if down here is 198, is it realistic? Can Apple really drop from 288 to 198? That will be, guys, if we drop to the yellow brick road during a war, Apple can possibly drop to 30%. Guess where Joel is buying it? At the yellow brick road. 5 minutes it took for me to get that information. So you can buy it here at 14% or buy it when it drops to 30. Because it's going to be either or. Either we about to bounce or it's going to drop another 15 to 16%. I don't care how many iPhones are being sold. I don't care. Who cares? That's great. That gives me all the reason to buy it 30% down. I don't know what you guys are doing, but I'm showing you what the professionals are doing. And you don't see a million different things on my charts. I just did a little bit of math. Now, if you're bad at math, then it's going to be a problem. If you're bad at math, it's going to be an issue. All right? All right. So that's how I would break it down. That's the yellow brick road. All right? Any other questions? You said you can't. Are you being funny or you really can't read? You can read, chick boo. All right, any other questions? Let me go back to the top. Let me make sure that my super fans got their questions answered. Denny, did I answer your question regarding the VWAP? Let me know. Just give me a second, guys. I'm just going through the questions. Give me a second. What happened to my music? What happened to Murray?
Now connected to MacBook Pro 2.
All right. Let me get through the questions real quick. Yes, I do it all. Somebody asked if I do day trading. I do everything. I teach everything. And I teach everything with one simple basic way of looking at the market, BTG, which is bias, trigger, and goal. And I teach for free. I'm not gatekeeping anymore. Well, I never gatekeep. But there are other live hosts that are only giving you information if you go and take $1 million class, and then the $1 million classes are worthless. And I'm here to make all educators that are mediocre mad. Joel, stop giving them all the information. I can't make any money. You're giving them all the secrets and it's better than what I'm doing. Why would they take my $10,000 class when you're giving free information? I'm trying to, you should be trading and investing. I'm hurting all educators out there that's making a living off of y'all. I'm tired of seeing it. I'm the educator killer. Look, I ain't got time to be looking at bad strategies anymore. Can you explain your dark and hollow candles? All right, I'll do that. All right, so if you look at my charts, guys, let me turn down Murray again. If you're on a platform like Thinkorswim, you're going to see candles that look like this. There's so many different ways. All right, so I'm going to show you guys a regular chart. So if you were to look at regular candles, they're going to look like this. Let me go in here and change my settings. Uh-oh, it's not letting me. Oh, here we go. I might have to log out and log back in on my Thinkorswim. Dang, it's not letting me do it. Hold on, guys. All right, give me a second. I'm gonna have to log out. Thinkorswim is getting overloaded with information, which will probably cause this live to go slow. Yeah, I'm having a performance problem, so I'm gonna log out and log back in. In the meantime, do you guys have any questions that are just normal questions, just regular questions regarding the market while I log back in? Yeah, I can pull up AP. I can pull up energy stocks. You just got to tell me the exact ticker that you want me to look at. And then you got to let me know if it's a trade or an investment. All right, let's see if this works. And I got to get out of here, guys, at 12. I have a whole bunch of things I have to do today. So just letting you guys know. Let's see if this works. Nope. Hold on. Murray, what you talking about? What is Mary crying about? Oh. All right, there we go. All right, let's try this again. All right, so if you look at my charts, you're gonna see how what he was asking about was hollow candles versus solid candles. So I'm gonna show you guys how regular candles look. If you looked at regular candles, they're going to look like this. Actually, yeah, I wanted to make sure the colors were there. If you looked at a normal candle and I took the TTM trend off, oh, I shouldn't have done that. Let me hit cancel. I'm just gonna. All right, so regular candles are gonna look like this. Red, if a candle is red, that means it opened at one price and it closed at a lower price. So these are all bearish candles. That means they opened, like this last candle opened at this price. It went this high and that high, but then it closed at this price. All right, the candle represents the opening and the closing of that price. When you're using trending indicators, guys, the trending indicators are going to the trending indicators are going to color code the chart. So it's going to make some candles that are red or green, they're going to make them all the same color. Now you can also make the candles hollow, or you can make them solid. Now most of the time it depends on the person that's using it. I usually use hollow candles as my up candles. So they have this thing, you guys can't see it, but when you pull up the chart, you can feel the box up, or you can make it solid. You see how? Well, I'll show you guys how one looks. This is how it looks when it's hollow. You see these green candles? It's hard for you guys to see it from where you are. From where you are, you really can't see these green candles, so I have to make them solid so you guys can see it. So you see how this is green and it's hollow? You can make it solid or you can make it hollow. There's no difference. Now, the reason why I made my up candles green, hollow, and then some of them solid, is because when I put the TTM trend on, and it makes all the candles the same colors, the hollow candles will be the up candles. The solid candles would be the ones that go down. See, right now, every single up candle is green. This is normal. So if you pull up a regular chart, all of my green candles are going up, all of my red candles are going down, all of my hollow candles are up. I can make those candles solid if I want to. I can go into settings, I can go to appearance, I can fill the green candles up, and now you can't tell. Well, you can tell, but now you have green candles that are up, red candles that are down, everything is solid. But the reason why sometimes you'll see me do this, and I'm going to show you why. When I put a trending indicator on my chart, I need to know which candles are up candles. And I'm going to show you. When I put the TTM trend on, and you'll see how it looks. When I put the TTM trend on, now, even red candles, because now that I have the TTM trend on, you guys see how some of these candles are solid and some are up. The solid ones are actually red candles. This candle right here, if I took the trending indicator off, this would be red. How do I know that it's red? Because I made all solid candles down candles and all hollow candles up candles. So even though we're in a uptrend that's green, the solid candles are the red candles. And then this TTM trend, you see how these are red candles, but you see how these hollow candle, this hollow candle right here, this is actually an up candle, but it's red, but it should be green. But I have a trending indicator on my chart, so sometimes I can't tell what's really green and what's really red. Okay, does that make sense? Hopefully I was able to answer your question about hollow candles and solid candles. All right. See, those are hollow. Even though all of these are green, in reality, that's a red candle. This is a red candle. This is a red candle, but you can't tell because the trending indicator that's on there doesn't let you see it. All right, so it's just for those people that want to know the opening and closing of the chart. When I'm educating, though, guys, I want you guys to see everything. So I'm going to make everything solid. So you're not going to know which candles are up or which ones are down. You're just going to see red and green. So when I'm teaching, I like it to look like this because it's so much easier to see. You see how everything is just solid going up? That's better for your eyes to see and to see the trend than to see hollow candles also. All right. Not really, Ann. It's just a red candle or a green. It's just if you want to see the reality of the candle, then you know that it was a down candle. But the TTM trend is gonna make everything green. That means up candles, side candles, down candles. It don't matter. The TTM trend and the Heikin Nishi is gonna make everything green. It's like throwing paint on every chart. Every candle, it don't matter. They're gonna paint every candle up. And this is gonna paint every candle going down. But if I make it hollow, you can see which candles actually were up candles or which candles were down candles. The trending indicator is called the you got two. You can use the TTM trend, and you can only find it on two. You can only find it on Charles Schwab, which is Thinkorswim. or TradeStation. That's it. That's it. I haven't seen it anywhere else. It's called the TTM trend. If you don't have access to the TTM trend, you can use Heikin Ashi. But when you're using Heikin Ashi, guys, you're not going to be able to read. Dang, this thing is slow today. You're not going to be able to read. If you're using Heikin Ashi, you're not going to be able to read the opening and the closing of the price. So I'm going to show you guys how the Heikin Ashi would look. So you can use Heikin Ashi, or you can use TTM trend. If you're using Heikin Ashi, it's going to look like this. That's Heikin Ashi. It's even cleaner than what you normally look at. You see how clean that is? The Heikin Ashi is the cleanest chart you're going to see. You're going to see a lot of teachers teaching it, but it gives you a false sense of what actually was happening. But it does show the trend in a very, very clean way. So I like looking at Heikin Ashi, guys, when I just need to see the trend immediately. I'm like, oh, that's a downtrend. Let me go short. So when I'm using, that's an uptrend. Like, it's so clean, there's no mistaking what direction this is going. And you guys know how many candles I need to establish a trend. 3. You need 3. All right. Let me see. Just answering questions. Answering questions. Just give me a second, guys. I'm just going through the questions. There was VWAP trading. That's hilarious. VWAP trading was asking what time frames VWAP did you have there initially. I'm gonna be honest with you. If you're still here, VWAP trading, I only use the VWAP when I'm intraday trading, and I'm gonna use it on I use it on either a 5-minute, a 3-minute, or a 1-minute chart. So 5-minute or lower, I'm gonna use the VWAP. I'm not even gonna lie. 5 minutes or less. 5-minute, 3-minute, or 1 minute. True. It's sounding like a foreign language. It's no problem. The more you trade, Sean, the more it's going to start to make sense. Denny, you were asking about the red cloud. So there's a couple of indicators that are out there. I used to teach the Ichimoku, but what I'm doing now when I'm teaching the Ichimoku and the FW Mobo. So a friend of mine introduced me to the FW Mobo like 2 years ago, and I've been using it as an intraday trading tool. But I teach people that are just learning the market. These are I use the Ichimoku kind of like as a, let's see if this is it. Yeah, I try to teach the Ichimoku, guys, for you guys that have a real hard time figuring out trend. We're looking at, let's look at a stock too. What's a stock you got? We were looking at Apple the whole day. Give me a different stock. Let's look at NVIDIA. So let's say I wanted to look at NVIDIA, and I had a hard time figuring out if NVIDIA is bullish or bearish at the moment. Well, you can use a cloud to kind of tell you what you think is happening. Now, everybody right now, what color is that cloud? Is that cloud red or green? What color is this cloud, guys? That cloud red or green? Well, guys, that cloud, yeah, it's red, orange. It's reddy, orangey, reddy. Guys, this cloud started to go red on NVIDIA. Y'all know when it started to go red? January the 13th. So there's been a cloud over NVIDIA. There's been a cloud over NVIDIA since January. So if you were using the Ichimoku, you kind of would have had a bearish bias. When the cloud is green, like this, you see that, and the Ichimoku is that lower. The Ichimoku, guys, is this lower cloud that you see down here. This is the Ichimoku. Dang, I spelled it wrong. And this is kind of like training wheels to kind of teach you guys trend. That's why I'm using a trending indicators. I'm trying to use clouds because trend is where a lot of you guys go wrong. And you're flipping to and from 17 different charts trying to figure out a trend, right? Stop doing it. Use one chart, use one indicator to kind of give you the bias. My way of trading and the way that I teach is I teach the BTG system that I created. BTG is bias, trigger, goal. Bias, you use an indicator to try to find the bias. A lot of us use moving averages to get the bias. That doesn't mean that you necessarily have to take it that way. I just need to know the bias of the chart. Then you need a trigger. What is going to trigger you to buy something? And then what is the goal? BTG, all right? So bias is super important to me. So a lot of people use the Ichimoku to get the bias. So if you were using the Ichimoku in June and this cloud started to go green, you would have said the bias is up. The 200-day is up. The Ichimoku is up. I don't want to take any shorts. And if you had done that in June, you would have been able to ride this cloud all the way up until it started to go red. And you guys know when it started to go red? In January. Then when the cloud started to go red in January, even though the 200-day was angled up and the cloud was over you, it told you there's going to be problems. Don't take any trades on NVIDIA. It's 50-50. If it goes down, though, for you smart investors and traders that are out there, it's probably, if you're going to take a short, take it to the 200-day and chill. Because the 200-day is still biased up, even though the cloud is telling you down. So that tells me down to the 200-day. Super simple. Didn't have to go through 700 charts to do this. That's where we went to, the 200-day. Where are we right now, guys? At the 200-day moving average. Very simple. You should have been long since June. You should have been short since January, but it was a short-term bias because you still got a 200-day that's angled up. Once you get to the 200, that trade is over for the short. Even though a lot of you guys still want to stay short, why would you go short when you know that NVIDIA had a conference last week? Now, it paid out, but I think you guys are just, I don't know, you just want to prove NVIDIA wrong. Like, NVIDIA is the largest company on the planet. Why do I want to trade against it when it has a conference out, when it's telling you about new products? If you've been watching any markets, anytime a company has a conference, it's building confidence in the company. But I don't be understanding what y'all be doing. I don't. I'm like, that don't make any sense. But if you make money, look, bulls make money, bears make money, pigs get slaughtered. If you can show me a P&L where you do that constantly, maybe I'll do it with you. Sometimes you just get lucky, people. Sometimes you just get lucky. I ain't going against the largest company on the planet during its conference. Never. If Apple's about to come out with some new products in September, it ain't no way in hell y'all gonna see me trading against it. Are you kidding me? I love money. All right, what are some of the other questions? And look, guys, I don't get offended by anything. If you can show me statistics or show me a chart and show me something, I'll believe you. But opinions, I don't go off of opinions anymore. Opinions, who cares? Show me a chart, show me the fundamentals, show me the information. Let's see if we all can collectively see the same thing. Right now, this chart looks like a mess. I ain't even thinking about trading or investing. I'm sorry, trading NVIDIA. Now, I would invest in NVIDIA right here. Maybe. So that's what the clouds are, guys. So that's for investing or maybe some shorter swing trades. Now there's another cloud that you guys can use that's called the FW Mobo, which is what my golfer friend showed me about 2 years ago, which really impressed me because if you know me, I'm like an old dog. I don't really want to do new stuff. But if you show me something that can work, I'll change it the next day. Like, that's just how I am. I'll back test it for 24 hours. I'll go back 5 years and look at every single trade for 5 years and then come in the next day like, yo, look at this new thing I'm using. So this works different. So the Ichimoku is more macro. The Ichimoku shows you the macro move. The FW Mobo shows you the micro move. So this is micro and it's called the FW Mobo, which I wish they didn't come up with that dumb name. Like, you couldn't think of a simpler name than the FW Mobo? How can I sell this? Ain't nobody gonna come on and be like, I use the FW Mobo. Like, who came up with the name? It had to be some geek. And I bet you the F, the W, and the Mobo means something big. I'm like, that is the most ridiculous name I've ever seen. But it works. So think about this. This is the cloud. For the micro, this is a micro cloud. This is for my intraday traders. This is what I use. You guys are actually looking at the chart that I use to trade. Y'all see how I don't have nothing on my joints, but you see how you can read my trades? I don't even have to teach it to you. That's how easy my strategy is. Look, just use your eyes. What would you do right here? I don't know. What would you do right here and right here? It's so easy, I ain't even got to explain it. Took me years to do it. But I finally created something that was so simple and so basic a 5th grader can understand it. All right? So this is NVIDIA. If I trade NVIDIA on Friday, could I have made money? I sure could have. What do you guys see happening at 9:30? Y'all tell me. What would you have done at 9:30? I ain't even gotta explain it. What would you have? What would Lisa do? What would Caffrey do? What would Denny do? What would Scott do? Who else is in here? What would Juju do? What would James? What would Arwen do? Or MM Michael? What is that? DP question mark? I like that because you're kind of like me. What would Joe do? What would DP? How did you get a question mark that's upside down? You got to teach me that one. What would TJ do? What would Sean do? What would Ronnie do? Exactly, guys. I would have been short. Right? Very easy, right? Joel, when do I get out? I don't know. Maybe there? Maybe there? I don't know. It's green. Would you go long there, Joel? Question. Would I have gone long there? No. Not because it's green, because the setup says buy. I wouldn't get in just because it's 11 o'clock. I'm done trading by then. This would have been my money made. I would have been out by 11. I don't trade the 12 to 2 session because you get this bull crap. See how it went green, then it went sideways, then 12 o'clock came, and you got, well, actually, it started going up a little bit at 12. I ain't trading that because it didn't do nothing from 12 to 2. Now, I would have come back at 2 o'clock. Well, what would you guys have done at 2 o'clock? This is what was happening at 2. What would you have done at 2? This is 2 o'clock. Y'all tell me. What is the chart telling you to do? I don't even have to teach this. If I charged y'all for this, I would feel bad. I'll be like, why am I taking their money? Maybe I'll charge y'all $5 for this. But this cat's out there charging y'all 10 grand for stuff that don't even do a tenth of what this does. Look at that. There you go, guys. Very easy. That was 3 o'clock. The news come in at 3? That was probably that's that BS I be talking about, guys. That BS where they be coming in and placing orders and hitting all of y'all stops. That's that BS right there. That them flash crashes where they make the market just jump real quick, take everybody's stop. See, I don't like this. But look at that. That was an easy short. You guys are trying to figure out a short by flipping back and forth. You're using 17 indicators. You guys got the RSI, the MACD, the stochastics in the bottom part of your screen. Why do you need the MACD and the TTM squeeze and the relative strength index and the Williams percent R and the advanced decline lines? You got pivot points, Bollinger Bands, Keltner channels, support and resistance, VWAPs, pointer controls. You got all of that crap on your screen. And y'all know who I'm talking to. Joel ain't got none of that crap. And y'all figured out my strategy just like that. I ain't even explained it. If your strategy requires 5 scientists to break it down, it's probably not working. It's too much information to stop. Look, NVIDIA is either going to go up or down, people. It's either going to go up or down. Up or down. I don't need 15 indicators to tell me that. It's either going to go up or down. Joel, you forgot it can go sideways. You're right. It can go sideways. That's 12 to 2. It's going to go up or down from 9 to 11, sideways from 12 to 2, and then up or down from 2 to 4. It's that easy. Find some trending indicators. What you guys, as traders, in my opinion, what you should be focusing on is what chart you're going to use. Now, I honestly believe that you guys shouldn't be trading longer than an hour. Why? Because I think all of us value our eyeballs. And if I had known that in the past, I wouldn't need these special $1,500 glasses I got on now. The shades, and it keeps the blue light out, and it's progressive. I got all types of stuff going on in these glasses. I valued my eyes before I started trading. I don't think you guys should be trading more than an hour. trends, and from what I've seen, from what I've been noticing, now, because the volatility is high, you don't see trends that last more than 30 minutes. Like 30-minute trends is the max that I've seen with this volatility. When the volatility is normal, guys, trends were only lasting for about an hour. They weren't lasting all day long like you think they do. During that morning session, you're going to get an hour move. We don't know what direction it's going to go in. We don't know what time. Sometimes it starts at 9:45. Sometimes it starts at that 10:30 reversal, but it's usually over by 12. 12 to 2, the market will take a break. Sometimes it will float in one direction. The volatility goes down. A lot of people love trading that period because I don't want to beat you over the head if you trade that period. But if you trade the 12 to 2 period, I get it. That's the only time you can trade. The volume isn't as high, so you can control the movements. But you guys are using like 15-minute and hour candles on the 12 to 2 period. What kind of information you gonna get? If the period is, I want y'all to think about this, common sense. If the period is only 2 hours and I'm using an hour chart, what is an hour chart going to tell me? I can't get a trend in an hour chart because it's still printing. But you guys are using a 1 hour chart to trade for 2 hours. That makes absolutely no sense. How are you going to establish or see the trend? Okay? So, if you know that trends are going to be an hour long, in my opinion, I use a 5-minute candle because if it's going to trend for an hour, and I'm looking for 10 candle trends, 10 candles times 5 is 50 minutes. That's going to put me in the sweet spot of finding the trend early and staying in the trend for at least 10 candles. How many candles y'all see on my page right now? That's about 10. I'm using a 3-minute candle there because I've been noticing 30-minute trends. That trend lasted for about 30 minutes. 30 minutes, reverse engineer that. 30 minutes divided by 10 candles is a 3-minute chart. I don't pick the chart and then try to force it on the market. I look and see what the market is doing, and then I create something around the market because the market is bigger than us. Y'all are doing the opposite, which if you got a P&L and you can show people what you're doing, great. Keep doing what you're doing. I'm talking to people that are struggling. I'm not here to bash people that do their thing and make 90% returns every minute. You super traders out there that never lose. I ain't talking to y'all. I'm talking to the people that are struggling. I started becoming successful when I said, all right, forget it. I can't do it. Market, tell me what to do. The market tells you what to do. The market says there's high volatility, Joel. I'm not giving you 1 hour trades. I'm going to give you 30, maybe 15 minutes. I'm like, cool, let me adjust to that. You giving out 15 minutes? 15-minute trends? Great, I got that. Y'all ain't doing that. Y'all ain't even adjusting. Y'all like, I don't care about the market. I'm bigger than the market. No, you're not. You're not bigger than the market. You gotta adjust to the market. If you want, like I said, I don't know how successful y'all are. I'm just telling you where I'm coming from because I show my receipts. I have no problem showing my numbers. I do it all day, every day, twice on Tuesday. I talk about my wins, I talk about my losses. Now, the cloud for the FW Mobo is just going to tell me, it's going to give me an idea. It's not going to always be 100% right. But y'all see how that trend was 10 candles. I've been teaching 10 candle trending for almost 5 or 6 years. Okay, 4, 8, 9, 10, it's about 10 candles. I might want to start chilling. You can't do that if you're flipping back and forth between 18 charts. Can't do it. When I didn't have trending indicators, guys, I used to flip back and forth because how else are you going to see the trend? I see why you do it. You go to an upper time frame to get the trend of the market, and then you flip back to the lower time frame. Yeah, when there was no trending indicator, now there's trending indicators. Why I got to do that anymore? The market is making it easier for you to see things because they're developing things so you can start taking stuff off your screen. You guys are adding more as the years go on. I'm taking stuff off. I had a 513 at first. Now I got a 10. I had the MACD, the stochastics, the relative index. I took that off. I now have the TTM squeeze. I flipped back and forth between 5 or 6 different charts. They came out with TTM trends and Heiken Aishis. Now I can use one chart. The volatility goes up or down. They created the volatility index. So now I know when volatility goes up, I can adjust with my time frames. Now I have a VIX that I can look at so I can know if volatility is high or if volatility is low. Adjust with the market. It is getting more advanced, but you guys are not using it to get more advanced. You guys are actually putting more information on your charts. And then you're getting paralysis of analysis. And that sucks when it comes to trading. When you get the paralysis of analysis, you're like, shoot, how do I know when to take a trade? Or you're missing trades, right? And you don't want to do that. You don't want to do that. All right. I'm going to go from so now I'm going to go from the lower part up. Guys, I'm not ignoring your questions. It's just that this is supposed to be a superfan session. TikTok did not allow me to put it on superfan, so I'm really only answering questions from, and you can tell a superfan they're going to have something by their name. When they come into the room, it's going to say superfan, or it's going to have millionaire, it's going to have the millies. You're going to have the mill tab next to your name. Those are the questions that I'm answering at this particular time. All right. But during my live sessions, I don't do that. All right. So like, for example, Denny, if you look at her name, you're going to see, oh, you can't see it when I pin it, but if you saw her number if you saw her name in the comment section, you're going to see Mill by her name and it's highlighted. You can grab that heart me up top. That will also give you visibility, and then I can answer a lot of your questions. So she asked, so to be clear, that's FW Mobo and Heiken Aisha. Yes, FW Mobo is the cloud that you see here, which is the micro way of trading. See, right now it's starting to go green at the end of the day. The Ichimoku is the macro way of seeing what the trend is. Some people don't like it. Like, guys, I don't get offended when people are like, Joe, the FW Mobo is trash. The Ichimoku is trash. It's too much information on my chart. Great. I want you guys to use less information. Less is going to be more. But you need something. So when I ask people when they're trading, I say, what are you using for bias? If you can't answer that question, chances are you're probably struggling in the market. What are you using for bias? You can either use a trending indicator or you can use a moving average as the bias. Some people use the 10-day, people use the VWAP as the bias. And then you got to know what your trigger is. My trigger is usually 3 candles that are a certain color. Okay? All right. I'm going from the down up now to see if I can answer as many questions. All right. Super fans, you guys have any other questions? Put them in the comment section. Any stocks you want me to look at, put it in the comment section. Let's look at oil real quick. All right, I'm going to look at the MCL. I'm also going to look at some oil stocks. Oil was popular. Let's say you wanted to trade oil. I'm not going to say anything. I'm not going to say a single thing. What should you have done at 9:30 this morning? This is what you guys were going to see oil doing on Friday before the market opened. What do you guys see? What do you guys see in my chart? You are looking at the micro oils. Seems kind of bullish, right? So you see a uptrend and the cloud is green. Right? This cloud is green. That is as green as you can green be. Anybody that said, I'm going to go short. I'm going short, Joel. Short. I'm like, what do you see? I get it had been falling. I get it. I even understand the fundamentals of it. But see, that's different when you're day trading. When you're day trading, guys, I can't take a overall view of the market when I'm day trading because trends only happen. Remember, the market is telling you, Joel, trends are only going to last 15 to 30 minutes if the volatility index is higher than 20. It starts spiking. You might get 15-minute trend up, 15-minute trend down, 15-minute trend up, 15-minute trend down. Traders that can take advantage of that are going to make a whole bunch of money. So I'm going to have a bias to the upside, even though it's moving. All right? Doesn't mean that I'm going to be bullish because you see, we got a couple of red candles. And see, that's what happened. A bunch of people said, I'm just going short. And oil said, no, we going up. We don't care about what your bias is. We're going to go up and maybe the bias is going to be for about 15 to 30 minutes. So if I was trading this and I was able to catch the trend, the trend's not going to last that long. Look, guys, we went, look at how this thing is moving. We went from, this is 9:30, from 9:30 to 9:57. This is a 27-minute move. 27 minutes, we move one direction. Then for another 12, we went one direction. Then we went 15 minutes up. Then 12 minutes down. And then we moved. This was a nice move. This is the 10 candle trend you're really looking for. How many candles y'all see in this trend? Out of all of these moves up until 11 o'clock, what was the most amount of candles that you guys saw going in one direction with no pullbacks or anything? It's going to be this trend right here. Well, this trend in oil was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Do y'all know the 10th candle was the high? Now, here's the thing. I don't teach 10 candle trends just last week. I've been teaching y'all this for 10 years. The market is telling you what kind of trend, what it wants to do. You guys are trying to figure out what you want to do and force it on the market. Why are you doing that? Go back test, look at what the market is giving you, and then adjust to the market. That's how you become profitable. You adjust to the market. You adjust to the conditions. It told you what it's doing. How do I know that there's high volatility? Easy. Pull up the VIX. What is the VIX reading right now? The VIX reading right now is 26. Guys, that's high. A 26 reading? Come on now. That's high. That's not normal. Normal VIX readings, I'm going to show you. Normal VIX readings under normal conditions. I'm really mad that my things are gone. I got to leave out of here in a second. Normal readings, I'm going to pull up a month chart. This is the VIX over the years. this is the VIX over the years. This is the value. This is when the VIX is at extreme levels. Y'all don't hardly ever see these levels. That's 50. Y'all see these little spikes on the chart? The little lines y'all see are rare. Those are very great investing periods. We spend the majority of our time between, it looks like 10 and about 10 to about 23. Let's just say 20. 10 to 20 is where we spend the majority of our time. Anything higher than that, there's volatility in the market. That means the ocean, 80% of the time is just calm waves. You guys can trade for 2 hours, get these nice trending moves. But 20% of the time, the waves are gonna be big. Right now, we're experiencing this. Y'all ain't adjusting to this. Y'all still think it's this. How come my trends ain't lasting all day long, Joel? Because you ain't looking at the VIX. The VIX told you, oh, the moves you thought you was getting 3 months ago, oh, you ain't getting that. No, son. But I was surfing these waves, and do you see the waves today? Them waves is 3 times higher. You can't surf them waves, but I'm a professional. You can't surf those waves or you're gonna die. And what do y'all do? You go out there, you try to surf the waves, and then you get hurt. They're trying to tell you that the volatility is high. Y'all won't adjust to it. You can trade it. Y'all ain't adjusting. All right, get chopped up out there. Choppy jalopy, just like Ghost said. All right, let's look at Fro real quick. Denny wants to look at Fro. All right, we're looking at Frontline, guys. Oh, let's look at it on a week chart. I usually have my chart set up, but something happened. I think Thinkorswim readjusted, so it deleted all of my, I had all of my things across the top where I could just go up there and pull up the day chart, month chart, week chart, 3-minute chart. I can't do that today. So look, Yellow Brick Road, you should have bought. Yellow Brick Road is angled up. But look at how far away we are from the Yellow Brick Road. Oh my God. Still bullish. Still bullish if you were using a Fibonacci tool. We pulled down to the 50% area. That's actually a decent area to buy, in my opinion. If you really want to go deep down into it, do what I did with Apple. Go back about 5 years, look at how many times Fro sold off, and look at what the biggest moves were. Take the average. That's going to give you an idea of how much this stock moves. It's down. Frontline is down. And if you guys don't know the ticker symbol is FRO, like Fro. It's down about, we're down about 26%. Now here's the thing. Frontline is down 26%. That means right now, as we speak, we're down 26%. So if I wanted to take a shot at this, even though it's not all the way down at the bottom, and I want you guys to stop doing that trying to buy double bottoms, triple bottom crap is what new educators love teaching. Ooh, let's teach double bottoms and triple bottoms. That'll make me sound smart. Stop doing it. Because real trending charts, real stocks, real traders and investors, we all know that stocks travel at a 45-degree angle. They don't travel across your screen at 180. You guys have strategies where you get into things that are going sideways. I'm going to look at the resistance and the support area. I'm going to buy it every time it hits the support area. And then you're wondering why you can't make money. Real stocks go at a 45-degree angle. So you should be buying it when it hits a moving average or a 45-degree trend line. This is what you should be doing. Y'all see this? This is the difference between a beginner and an advanced trader. You're taught to buy at 180. No one wants a stock that's going sideways. We want stocks that are traveling at a 45-degree angle. Just tilt your head this way and you become an advanced trader. That simple. All right. So we're traveling near that area. If you break that area, it will break trend. That's what you should be looking at, or this moving average that's moving at about a 35 to 40 degree angle, not 180. Because stocks that travel like this, guys, they never come back to a double bottom or a triple bottom. Now, I will say this. If it was doing this and it was about to hit a double bottom, that's different. This is different, guys, if you're trying to buy a double or a triple bottom. That's different because you're within a bull flag. But for you guys that are putting orders way down here at $20, like I ain't buying Fro unless it gets back to $20. When it gets to $20, it ain't a bullish company no more. It's now a broken company. Ain't nobody gonna want to buy it down there. You don't believe me? Take 20 stocks and do that and back test it. You're gonna be like, dang, why ain't nobody ever break this down to me? I've been buying these companies at the lows thinking that this is buying low. It's not. Because common sense doesn't tell you to buy something at a 45-degree angle. You got to talk to real traders or investors to understand that. People that just come into the market that never bought nothing, never had more than 100% return, they gonna teach you double and triple bottoms because they ain't never made no money. They never had a 2,000 or 3,000% return. This is the first thing we're told to teach. And I get upset when I see people doing it because I'm like, oh, okay, you really don't invest in trade. You're a great educator. You studied the material and you believe this is what we're supposed to teach, but that's not how real money is made. Anyway, so it can come down to this line. You might want to buy it. All right. If it comes all the way back down to the yellow line, which I can see why that is the yellow brick road. The yellow brick road is still angled. So yes, there are times where if it comes back fast enough, you can get that double bottom because that double bottom is still gonna be at the same level that this yellow moving average is going to be. So it looks like you're buying it, but in reality, it's really maybe, the yellow brick road is still angled up. A lot of the times when we get to levels like that, it's because the VIX is at 50 or 60 and a company just gets hit and, it just gets cut in half. Anytime you see a stock go from $20 to $40, usually within the next, if it can go from 20 to 40, it will usually get cut in half to about maybe $29. And that's what's happening with Fro. The minute you saw it go to $40, you should have been like, oh, okay, let me throw a Fibonacci on this bad boy. Let me throw a 45-degree angle on it and see if we can catch it when it gets into this range. All right, I got to get out of here, guys. I got to go. I'm going live. I go live every night at 6 o'clock. I'm going to start on Mondays. They're only going to be Monday, Tuesdays, Wednesdays, and Thursdays. I'm also doing live trading at 8. So 6 to 8 is education, free education, your stocks, my charts. 8 to 8:30, we're going to trade the futures market preferably gold, maybe the NASDAQ. I can show you guys entries and exits using a lot of the stuff that I'm using. I don't want you guys to trade like me, but you can follow along and we can talk in the comment section and see what we see. If you want to be a super fan, you can come up here, grab that heart me. You can go into there and grab the super fan. You can become a super fan. If you become a super fan, you're going to be part of a group chat. There's a group chat where no matter what I'm buying, no matter what I'm selling, I'm talking in that particular room. Every time I buy something, every time I sell something, if I'm investing in something, selling something, we talk it over in that particular room. All right, there's only a few of us that are in there now, so take advantage. And everybody that's in there is pretty educated. We got some new people in there, but everybody's pretty educated, and we're talking about the market. True traders, true investors, you ain't got to worry about, people coming in and saying negative things. People are showing receipts. They're talking about what they're buying, what they're losing in. It's just a nice little group to be in to kind of get a feel for what's happening in the market if you don't want to come in the lives and see it this particular way education-wise. All right, Wednesday, I might have to go a little bit early because I am driving. I'm driving to another city. So on Wednesday, I might not go live at 6. So I might go live at 4 o'clock on Wednesday, but I normally go live from 6 p.m. to 8 p.m. And then Saturdays and Sundays like this are going to be pop-ups. Sundays are going to be dedicated to my super fans. Now, normally I wouldn't be able to allow everybody in here, but TikTok would not let me do a super fan live this morning. I don't know if something's happening with the platform. It just wouldn't let me do a super fan live, so I had to just cater to my super fans with their questions today. All right, I want to give a shout out to G7, the one and only, Denny Tyler, Undercover Organizer, Caffrey, Queen ECE Entertainment, Arwen, Carlitos Way, Zano, Ghost 13F, and coming in at number 10 is Cinco Fines. And we'll be out of here. Thank you guys for the support, and I will see you guys tomorrow at 6 o'clock. Later. Let me change this out, and I gotta go. I can't